Oh, baby. Now this is what I'm talking about. An actual good response from earnings? Oh, I didn't know this was possible in the current market situation. Who would have known? And not even that volatile. Just positive. Apple reported earnings in the after hours. Obviously, we're going to be talking about it. We're recording this the night of. We'll be posting this in the morning, obviously, because it's already past 10, so why would I post this late? Okay, we'll be posting in the morning. I hope you're very excited about it. So let's dig into these earnings and see why it popped up. You look at the history of Apple. It, as well as a lot of tech, I've seen a pretty rough month. If you look year to date here, so since the start of the year, this is a stock that is not loading. There we go, down 12.5%. Just in a month span. Pretty high for a company as superior as Apple, I guess is a fair way to say it. Still good numbers on the year, up 16% on the year, but typically Apple tends to outperform. And obviously on a 5-year horizon, this thing is still ridiculously up, so nothing to worry about there. Just really over the last month, we've seen quite a bit of a sell-off. And mostly just due to people, again, shifting out of tech companies, and then we're going more into a everything's been down, but you've seen the Dow outperform the NASDAQ, which is a little bit crazy. You don't typically see that, but it's all right. Let's look at these earnings. If you recall, I expected a $120 billion line, which is going to be a beat of around $1 billion. That's what I expected, and let me just tell you, I peaked. Oh my gosh, I was wrong. But in the other way, holy crap. EPS line, GAAP EPS of $2.10, beats by 21, very nice there. Really like to see that. It's a big beat in profitability. But here's what I'm talking about. This is a company that continuously, somehow, how do they do this? $123.94 billion, up, beats by $5.41 billion, up 11%. How do they continue to grow like this? How do they do it? I don't know how it's feasible. This company is, they're top notch. $5 billion beat over analyst estimates? That's ridiculous. How are they able to post that? I just don't know. And a couple of these lines you see where it gets a little bit buck wild. iPhone revenue came in at $71.63 billion. That's incredible numbers. Mac at 10.85, nothing crazy there. iPad 7.25, nothing crazy. Wearables, fantastic. All these are obviously record high numbers. 14.7 in wearables and 19.52 in services, which is, again, continuing to grow by massive margins. Very excited with that. And we'll see it when we look at the press release here. Let's go, baby. So we saw that revenue up 11%. We like seeing that, okay? A little bit of words about the company. Again, they declared a 22-cent cash dividend. Nothing shocking there. Would have almost hoped they raised it. Obviously, start of the new year, Q1 here. It's okay. It's okay. We don't need a raise necessarily. They've been doing pretty good in terms of that. They've been doing pretty darn well. We don't need to look at the earnings call, but, I would love to. We want to look at the financials. So let's get into the financials, baby. That's what we love to see. This is just the press release again. They're fooling me, aren't they? Oh. See, they're doing me dirty here, and I think that's very rude. Consolidated financial statements. We'll look at these and do it this way. We like looking at numbers rather than just reading the words, okay? It's a better picture for people. It really is. So from product standpoint, we look at a 3 months ending line here. So really year over year when you're talking about Q1, $104 billion in product. That compares to $95 billion of just a year prior. Significant numbers there. And services, this is where the really big stuff we're talking about. In terms of percentage growth, quite nice. Products still outweighed it, obviously, in terms of overall, but there's a lot more that goes into products. From a services standpoint, 19.5 compared to 15.7. So, very nice to see $4 billion growth there. in the span of a year is very nice, and overall revenue growing by $12.5 billion, pretty significant. Pretty darn significant if you ask me. Research and development is up as well, around $2 billion. Operating expenses increased there, nothing crazy. Net income line, beautiful, absolutely beautiful, 34.6 billion this quarter, fantastic. That compares to 28.7 a year prior. That's significant growth. I mean, that's wild stuff. To grow the net income line by that much is pretty significant. Very happy about that. $6 billion growth in the net income line. It's very, very nice. Net sales by region, obviously worth looking at here. Americas grew, Europe grew, Greater China grew. A little bit of a decline here in the Japan segment, and the rest of Asia Pacific was up. So nothing really crazy there, all things considered. By category, now that's something we love to see. iPhone, massive growth when you look year over year, $6 billion growth. Pretty darn significant. Mac, Shaw, $2 billion growth. A little bit of a decline, actually, in iPad. So, worth noting, iPad obviously not the premier segment for them anymore. It's been pretty consistent, but they're not necessarily growth with that. Wearables continues to grow, $2 billion growth there. And services, as we saw, $4 billion of growth, really nice to see. The balance sheet, always worth digging into. Current assets right now, this is a small comparison here of only 3 months. Not really one I like to see. I like to see a full year typically, so you can get a better picture. But still, this is a balance sheet that's changed quite a bit in the last 3 months. $153 billion in total current assets compared to 134.8 of just 3 months ago. Massive increase here in this vendor non-trade receivables, $10 billion there has switched hands, and really accounts receivable up as well, and the cash position grew as well. Total assets in general, this company's got so much. I mean, so much assets, it's crazy. $381 billion compared to $351 billion. $30 billion of growth there in just a 3-month span is pretty crazy. Now, do they take on more debt to make it happen? That's what I'm curious on. We're going to take a peek. From a current liability standpoint, it absolutely looks so. 147.5 compared to 125. So they grew the current liabilities by a good margin. Does not outweigh the assets, so nothing crazy there. And from a liability standpoint, pretty significant. I mean, there was growth here, but not quite as much as they grew assets. 309 compared to 287. Or actually right around the same bit. But not quite as high, thankfully. So shareholder equity is actually increased by a good margin here, right around $9 billion increase, 71.9 compared to $63 billion of 3 months ago. So equity looking pretty decent for this company. It's a company with a lot of long-term debt, and I don't think that's a whole big issue in my opinion. I'm not upset by it. They've got a lot of assets, and they generate a lot of net income. I like this company. Look, do I love this stock? I do. You know I love the stock. And at these levels, I love it too. Under 30 PE ratio, ridiculously cheap. $2.6 trillion market cap, some might find expensive, right? And obviously is the most, really the highest valued company out there. It's fair to say that there's some price that comes with Apple right now, right? But I like it. I do like Apple at these levels still. I think this is a company that you buy it, little cat down there, and you hold it for a 10-year span, you're going to be loving life. You're going to be loving life. I mean, it's right in the middle. I mean, it's $20 below its 52-week high. Quite a bit really below that. Not quite at the 52-week low, obviously. Pretty far away from that, but it's still performance over the last month, I think, has been an overreaction to selling. I think these are good levels to buy the stock at. I love it. I don't know what you want me to say. I love the stock at these levels. I hope you have a great day.